this is a good example of a level 2 fake out. So the stock had made a new low, went down to 1558, and then it popped back up to 16. So when I saw that pop up to 16, I was kind of optimistic. I thought, okay, this thing just came off of the low nicely, and maybe we are going to start running to the upside. So my trade setup at this point is just going to be kind of versus 116. So you're going to get a nice move here where it really starts pushing above 16, and this is why, like anything, there's no guaranteed strategy. You know, I can try and be a pro at level 2, but I'm still going to get it wrong sometimes. And you're going to see that right here where Apple makes a really nice spike. I mean, 9 times out of 10, I will trade this that you're about to see, and I'll think there's some really solid upside coming. So you're kind of consolidating around 116 after coming off that low. And what I want to see to get me long Apple is I want to see a nice push above 116 back towards the opening price coming off of that low. Again, remember one of my favorite setups. It's a gap down that fails to break to new lows. That's what this is looking like. Apple gapped down, tried to break to new lows, but then started coming back up. So it's looking like one of my favorite setups, so I do get excited. Still waiting on confirmation though. Notice that when it came into the 1580s right there, it came right back up towards 116. Now you're getting above 16, you're starting to make a little push, but now you whip down 1590s, but whipping back up. This is a good example of whippy price action, where you're kind of whipping either way 10 cents right away. And now you start going. Look at that move right there. Nice quick 15-cent push. So just rewound it for a second. Again, check it out. When we pop above 16, we immediately push towards 1620s. And, you know, that gets me bullish. I place a bid on the 114 strike call. That doesn't end up filling. So because I can't fill the option, I end up just buying some shares at like 116.25-ish or so. And again, I'm just looking for some momentum. I feel like she's making a nice pop right here, right there, 116.20s. And she's just pushing. You can see I start getting an order ready on the shares. So what I'm seeing at this point is I feel like it was that setup where it failed to break lower, and now it's just going to start rallying higher. Doing a good job holding 1620s, not coming back down to 116. Testing new 5-minute highs. So you can see I take shares. Position is highlighted. I buy 30 shares at 116.30, and again, it just looks good. That's what I'm thinking. This thing looks good, and I'm looking for it to start rallying the highs. And you're continuing to hold the move. That's the important thing here. That's why I'm starting to think that it's going to be a pretty decent trade, because you're holding the 116 cross and you're adding to it. You know, you came up 116.40s, you're coming up near 116.50. Good solid reaction higher, testing 16.50. I'm looking for 117s. And then at some point here, something's going to go bad. It's just going to come back down and, you know, kind of negate the trade. But again, this is a good example of what I would call a level 2 fake out, where, you know, you get back to the two key questions. Who's winning the battle? Who is already in charge? In this case, the people in charge are the bears because the stock is down. However, I feel like the bids are winning the battle because they've pushed it off of the low by 80 cents, and now we're only 20 cents, 25 cents off the high. So the bears are still in charge because the stock's red, but I felt the bulls, the bids are starting to win the battle. So that's where I decided to get a little bit aggressive, make a little bit more of a guess. Did not have full confirmation, and it's just one of those things, again, got to identify your style, identify how you're going to trade, how aggressive you're going to be versus how conservative you're going to be. Sometimes you're going to get it right, other times you're going to get it wrong. This is one of those instances where I get it wrong. Even on this pullback though, pulled back off of 1650, you're still around 1620s. You're not coming down hard, which is why I'm not exiting here, because I still feel like this thing's holding up pretty fine. Where I would start to get concerned is if you make a hard drop down to 116. You can go back to 116, it just can't be at a super fast pace. You want it to be kind of a slower move back down. Fast move up, if it's a fast move up and it's going to continue going, you want a slower move down. That right there was not a slower move down. Now we're starting to crash back towards 116, so I am a little nervous off of that. That's my first warning sign right there, guys. That's the first warning sign that I just got trapped, so to say. I rewound it for a second so we can look at that again. We're in the 1620s, and then in just about one tick, you're going to go down to 1610 right away. See that right there in one tick, right down to 1610. So in hindsight, watching this on the film, should have just exited the shares right then and there once that caution showed up. I did not end up doing that. I ended up getting out like 1590s or so. As you can see, it kept going lower, so I did just kind of take a loss on this. But so that's a good example of trying to be aggressive and getting it wrong. And number two, level two, showing you the warning sign. When you dropped 15 cents in that one tick, that was a warning sign that for whatever reason I didn't respond well to, and I stuck with it. And you can see if we fast forward here, the stock just continued to grind lower and ultimately goes on to make new lows. And it was tricky though, because if we look at a chart of Apple later on in the day, she was such a little bugger today, because you can see this, here's the fake out, you go to new lows, fake out to new lows, come back up, come back down, and then around 11 o'clock you finally made that really hard push to the upside. So I got faked out on the first one. However, the trade did end up working, so you wanted to kind of come back to that at some point later on. So good example though of the fake out and of how level 2 can kind of show you that warning sign. And then thirdly, of how maybe the trade didn't work right then, but it can still possibly work at a later time.